Hey guys, my name is Matthew Spazziti here with New Millennium Wealth, and welcome back for the channel for another episode of my weekly market analysis. So today, the episode is number 12, which is pretty crazy to think about. We've been going for almost about 2 months now. I know that's not like a whole lot of time, but when you're creating content like this and you're constantly doing videos once a week at least, it is pretty cool, and it feels much longer than what it is, I suppose. So, anyways, well, today I was fortunate enough to find 4 different trades, one on the dollar yen, the CAD yen, the dollar Swiss, and the Aussie CAD. So let's go ahead and jump into it, guys. All right, let's go ahead and fatten this chart up a bit. Zoom out here. Yeah, cancel out the advertisement. Those are really annoying. Okay, here we are. The dollar yen. So as you can see, I went ahead and I drew my fib retracement tool from this swing high to this swing low. And we got a 618 retracement right here at 107.45.7. Now, if you guys have been following me for any length of time, you know that the yen pairs tend to not be my friend. I don't know what it is. They just don't tend to work out as well as I would like. Let's just say that. So, unfortunately, though, there are lots of trades on the yen pairs, and we just gotta, keep rolling with the punches. Hopefully, we'll get some winners on the yen pairs, and, we'll end up finally maybe breaking this whole curse with the yen pair. But, anyways, so as you can see, the market definitely closed below the structure low here. It even closed below this structure low, and I actually believe that I originally tried to take the trade on this currency pair from in this range right here, from this structure high, this lower high, to this new lower low. Unfortunately, as you can probably figure out, that didn't really work out very well, and we ended up getting stopped out quite quickly. So the next most significant structure point is here. Now, this brings up a very, very interesting situation that I in one of the trades I updated on my TradingView account. I talked about how it can sometimes be confusing when you get stopped out of a trade like this, and because you don't really know whether you should turn your expectations and start thinking bullishly, at least bullishly in this case, instead of the fact, we've been bearish, right? So we have a bearish bias. We constantly are thinking bearish, bearish, bearish. And I still think we're bearish, but short term, we're clearly bullish. Ever since the 25th of August, we've been bullish. And this is a very small bullish move, retracement if you want to call it that, inside of an overarching bearish trend. And the idea is, now that we got stopped out of here, do we reverse our expectations and should we turn around and start looking for maybe some long opportunities? Maybe now that we broke above here, we broke above this tiny little structure point here, so maybe we could draw our fib retracement tool here like this, and yeah, if it comes down in the 618, maybe we'll go ahead and get involved. That's what I'm more or less talking about. And what do we do? Or do we continue to try and take a second crack at it and see if we can go ahead and get short and try to short this market a second time? And to be completely honest with you, it's very, very difficult to know what to do in these situations. Now, here's the problem. I haven't backtested this strategy, so I'm just practicing this analysis on this currency pair, or on this portfolio of currency pairs, and I'm just trying to practice the analysis. And the reason why I do this is to not only get more screen time in for the charts, but I also do it to see whether or not I like how I'm trading this strategy. So yes, I already have a strategy like this written down, but it's not finalized, and I haven't backtested it yet. So the reason I go ahead and I do what's called forward testing, which is testing on live market data. The reason I do that is because I want to see, with the way that the strategy is written currently, do I want to trade it like that? When I'm actually trading against live data, I'm going to come up against weird situations that I did not anticipate in the trading plan, and do I want to continue to trade in that capacity or not? So, for example, when we get stopped out of a trade like this, do I want to take a second trade in the same direction that I attempted to the first time. So I was bearish before. Do I want to be bearish again? Or do I want to turn my expectations and change to bullish? If it was to break above this structure point, now I think I would start looking, I would either sit on my hands or I would start looking to see if we have any bullish opportunities here. And to be completely honest, sometimes sitting on your hands is the better way of trading. Sometimes you just don't know whether the market is actually doing a bit of a longer term reversal or whether the market's actually going to turn around and continue to go in the direction of the trend. And you just never really know. So what you have to do is you have to enter different trading rules in your trading plan. So maybe one version of the trading plan you have where you will take a second trade in the direction of the trend. Or maybe another version of the trading plan might be where, no, you sit on your hands and you wait for the trend to resume, or you wait for more confirmation that the market actually has reversed and is not in some kind of a retracement. Or maybe the third type of revision that you might have is like, well, I'm just going to go ahead and trade. Now that I got stopped out, I'm going to turn my expectations to the opposite in the direction of the trend, and now I'm going to start trading in the opposite direction. And you would have to backtest each one of those different versions of your trading plan. So here, that's something that I may end up doing. Unless, of course, I test one version and I already like the performance, I already like how it's working out, and I just go ahead and leave it there. And that's always a possibility too. Maybe you only attempt one version and you actually liked it, so you don't really feel a necessity to go into different versions. But anyways, so that being said, guys, we're going to go ahead and get involved in this a second time. The market's already going against me. I'm not feeling too confident about this trade, but it does look pretty self-explanatory. But I guess the question is it going to value this structure high, or this lower high, or is it going to value this lower high? This is clearly the most significant lower high that we have had. So if it didn't value this, I probably wouldn't even bother with this one. I probably would start looking to this one if I was going to maintain shorting the market at all. I may decide to turn my expectations and start trading again. But again, that's a downside of the fact that I haven't really backtested this strategy. Now, I'm in the middle of backtesting another strategy, so eventually I will get to this one. But unfortunately, because I'm in the middle of backtesting another strategy, I don't want to fall into shiny object syndrome and start and give up on this strategy just because I don't like the performance. Unfortunately, I've already done that before, and while it may seem pretty logical to give up on a strategy that you just don't like, for the purposes of sticking with your backtesting and finishing out the backtesting of that strategy, it's really important that you stick with it, because I've done this before where I was backtesting a strategy. I think I did this twice, and I didn't really like the way it was performing, so I switched strategies, and that happened to me 2 times, and I'm not trading with live money yet. In all honesty, if I had continued backtesting those strategies, I think I may have had a profitable trading strategy. I just got so frustrated, I just gave up on the strategy. And that's one of those things, guys, where you're just going to have to go through the process and push through, even though you might be getting frustrated with it. So that's how you determine ultimately how you're going to react. Trade with live data first, with fake money. Don't do it with real money, of course. And come up with a trading plan, trade with it, and see how you like it. See if you like trading that way. So do it like I do here. Use a yellow line, a green line, and a red line, and just, use this stop loss, this, I don't even know what you would call it, this short position or long position tool that TradingView gives you, and then go off and then record your trades in an Excel sheet like I'm doing here, and see if you actually like how the strategy trades with live data. If you don't, then go back to the trading plan and revamp it. If you do, then hey, call it good, and start backtesting over historical data, and then come forward and backtest a little bit more forward testing, and then go ahead and start trading with live money. That would be a great way of handling it. So anyways, guys, in the end, you need to have a trading plan. You need to backtest. I say this all the time. I know I say it ad nauseum, right? It really gets annoying. I understand that. But I wouldn't make a big deal out of it if I didn't personally feel like it was so important. It really is important. My mentors stress that it is important all the flipping time. And I am going to be no different. I think it's important. I think that's the way I was trained. That's how I was taught. And I very much agree. It is incredibly important to have a trading plan, to backtest that trading plan, and then to go from there. Never trade anything you haven't backtested, right? Just don't do that. It's not a good idea. Trust me, I have extensive experience in it. And yeah, most of the time it has resulted in me losing money. So don't do that. Learn from the mistakes that I have made, right? And in order to know how you want to trade a particular strategy like this and how you want to respond in different market situations, you're going to have to create multiple trading strategies that have different rules on how to respond to this. And you're going to have to trade to backtest to find out how that happened, which one was the most successful version. So just keep that in mind. But that's ultimately how you would handle the situation. That's ultimately how you would decide for yourself how you would respond given the different situations you might find yourself in. So let's go ahead and move into the CAD yen. Let's go ahead and zoom this out. CAD yen is unfortunately moving against me. As you can see here, our entry got hit multiple times here. Unfortunately, I just did not get involved. I had some alerts that were placed here, but I didn't have an opportunity to get to my computer to place an entry order in. So unfortunately, when I found this, we were all the way back here. I did come in and place my entry order, thankfully, before it got hit a second time. So now that we're finally in this trade, I really don't know what's going to happen. It looks pretty clear cut. 618 retracement. Looks like we're going to go ahead and continue to fall over or roll over and end up making money, or hypothetical money, of course. But was this the best structure level to choose? Well, in reality, it was a very good structure level to choose, but was it the one the market will respect? And as you guys always know, there is no way of knowing that. Hopefully it is, but it's a yen pair, so I don't know. We're going to just have to wait and see. You never really know until you get involved in the trade, you backtest it, and you forward test it, and then you get involved, and you never really know how it's really going to honestly behave with live data. So I hope it values this structure, this new lower high, and I would say there is a very sizable retracement here. The next one would be here, I would think, or maybe even here. This probably would be where the leg of the move actually started from. But yeah, if I get stopped out here, am I going to try to take a secondary trade up here? Yeah, maybe. I mean, that's what this orange line is. This orange line is the 618 retracement level measuring from this lower high right up here, from this structure high. And in reality, if I do get stopped out, that may be a great option. But again, like we talked about before, it all depends on how you want to handle these kind of trades. Now, for me, I'm kind of experimenting with different ways of handling stuff in my analysis before I go ahead and start writing the trading plan and everything. And I still have time because I'm still in the midst of backtesting another strategy, but eventually I'm going to be backtesting this strategy and I'm going to have to know how I'm going to want to handle it. So am I going to want to take a secondary trade here, and then if that trade gets stopped out, then turn around and say, okay, now I'm going to look for now I'm going to look for the market to be reversed? I don't know. But again, that's just something you've got to kind of decide on your own. All right, moving on to the CAD Swiss. Let's go ahead and zoom out here again. All right, the CAD Swiss looks pretty decent overall. If we zoom out to the 4-hour chart here, what we will see is that we made a new structure low down here at 70. It looks like it's about 71.79.1. And in reality, that indicates to me that this is going to continue to head lower, or at least I hope it will. Again, this was another opportunity where we got involved late. The market almost came all the way up here and then started heading lower. I'm hoping, and it was another situation where I had my alert on, but I wasn't able to get to the markets, and then I came in, placed my entry in before the market hit a second time, and now we are involved. Now, I'm hoping we're kind of looking like here, like we're creating a wedge pattern. That's what this looks like to me. And if that is in fact the case, then this could be one of those weird situations where we're just going to have to wait for the wedge pattern to figure itself out. And right now, it could be bouncing off the support level and it could come lower, but it could be bouncing back and forth, back and forth, back and forth for quite some time now, and it may not hit my entry for a while. So we're just going to have to wait and see. Clearly, we did make a new structure low here, which was lower than the one previously made. So there is a good indication that this could continue lower. However, if you'll draw your attention here, what you'll see here is that we were definitely more going in a bullish direction or a bearish direction, right? We were trending downwards. We're definitely going down up until right around here. Let me go ahead and draw this in. Go ahead and draw this right here. Doesn't have to be perfect. You guys kind of get the idea of what I'm trying to say. Like this. Whoops, don't want that. And then, like here. So as you can see, we were definitely channel trading down. This is what they call a channel. And it was definitely going down, and it was more of a bearish trend here. But now, it's more looking like we're kind of just, at least from the top support level here, looks like we're just kind of going flat a little bit. So it'll be very interesting to see what actually happens with this, but honestly, I'm hoping that because we made the new structure low here, that we're just going to continue lower, but we'll just have to wait and see. Last but certainly not least, the Aussie CAD. This one looks like we were already going in the direction of the trend right here. We're already making me money right now, of course, hypothetical money. And in the end, I kind of chose a structure level that was kind of in between the leg of the move. I mean, you could certainly say this was the starting of the leg of this move. I firmly believe that. But then you could say that overall, the leg of the move may have started back here, and that this was a mere just blip in the market. I don't know. Honestly, I felt like this was the starting of the leg of the move. It was a decent retracement in terms of the size of it. I mean, it wasn't as big as this one, but it was still a fairly large retracement overall. It's not a small one like this. So overall, I think that this can work out pretty well. I went ahead and I drew my fib retracement tool from the structure level here, swing high to swing low, right here. And, well, I mean, obviously it's not a perfect measurement, but you guys get the idea. This is how I decide where I get long or short. Is I draw the fib retracement tool, I put my entry on the 618 retracement, and if we get high enough, then we may have a great opportunity here, and that's precisely what happened. So this is looking pretty good overall. I'm hoping this continues lower and rolls over and hits targets. I mean, honestly, a lot of the trades that I've taken recently have not resulted in winners, and it's been kind of a little demoralizing if I'm going to be completely honest with you. I mean, I know I haven't backtested the strategy yet and whatnot, so I know that, I'm totally trading blind here, and that's why I'm not doing it with real money, and this is still more of a testing phase for me. But still, it still emotionally hurts when you take losses. And if it emotionally hurts when you take losses with fake money, then how do you think it's going to work out when it's with real money? Which is why it's incredibly important that you backtest your strategy. I actually did a video fairly recently on a great example of the power of backtesting. And I was backtesting my current trading strategy, and I ended up making like $666 on one of my trades, which was probably like the most I've ever made ever when I'm backtesting a trading strategy. And it's been really great, and it was really cool. And yeah, it wasn't with real money, but it was still really great. And I decided to, do a video on it because I actually had to stick with that trade for a long time before it actually ended up coming to fruition. And in reality, had it been a live trade, it would have been very hard to honestly stick with a trade like that. So it's just one of those things that I wanted to kind of talk to you guys about and let you know what it's really like and how if I hadn't backtested it, if I had that situation happening to me, with real money, I don't know if I would have stuck with it. But because I backtested it, if I ever decide that I actually want to trade that strategy, now I know that I can stick with that. Now I know that I'm going to basically be building my belief system in that trading strategy so that when I trade with real money, I know that I'll stick with it, type of thing. I hope that makes sense, but basically you backtest to build your belief system in it. A lot of people are going to want to shortcut the whole process, and they're going to come out and say, well, Matthew, what about, automating the backtesting and stuff of that nature? And look, I'm not against automating the backtesting. If you can find a software that'll do that for free or for money that you're willing to spend, I'm not at all opposed to doing that whatsoever. But here's the problem with having a automated system, a piece of software, essentially backtesting a trading strategy for you. The problem is that you're not building your belief system in it. That's why you want to do this manually, is so that you can build your belief system in the trading strategy. And so that you know how to manage your emotions as you're watching your trades try to come to fruition and things of that nature. You don't get that when you're automating a strategy. Now, if you want to go to an automated software and enter in your trading rules and you want to backtest it, have it backtested over a number of currency pairs or stocks or whatever, just to see whether or not it's worth doing the manual testing, that's not a bad idea. So one thing that I have often considered is entering my trading rules into an automated software and have it test over certain currency pairs so that I know, hey, if this is profitable, I'll go ahead and backtest it manually. If it's not profitable, then I won't even bother to backtest it manually. And I feel that is a better way of utilizing your time and utilizing it more efficiently, because backtesting can take a while. But unfortunately, there are still negative aspects of that. Yes, if you backtest a strategy and it turns out that it is not a profitable strategy, I mean, guess what, guys? You're going to lose out on how to handle that strategy with your emotions. You're not going to learn how to do that, and you're not going to learn how to go through all of those losses and the disappointment and how to manage your emotions when you come up against such a disappointing experience. When you backtest a strategy over a currency pair and you realize that it is not profitable, yeah, you kind of feel like you've wasted some time. And it is not the best emotional feeling in the world. Let's just say that much. So it does make a lot of sense to backtest it over manually, even if it means backtesting a strategy over currency pairs and finding out that the strategy just doesn't work on enough currency pairs to make sense when it comes to actually trading it. Or it doesn't make sense at all because it wasn't profitable one little bit. And yeah, it's going to be a little depressing when that happens, but you'll have to learn how to deal with that failure. And that's part of the trading journey, guys. That's part of the experience that comes with the territory. You just got to get used to that. So anyways, guys, I hope you guys enjoyed this video. If you haven't already, please like the video, subscribe to the channel, and don't forget to check out the website at newmillenniumwealth.com. Go ahead and click that Get Started button and sign up for the newsletter. You will get exclusive content that nobody else is going to be getting that will allow you to grow, and it will really help you in your journey to become financially free. Also, don't forget to check out the Facebook page at New Millennium Wealth and the Pinterest page at Matthew Spazziti. If you'll do all that for me, guys, I'll see you guys in the next video. Remember, know the risks, plan accordingly, and have a great day.